Many pre-retirees believe that once they sell their primary home and hit the road to travel full-time, their state tax liabilities instantly drop to zero. This is a massive, mathematically devastating legal misconception. In fact, thousands of mobile retirees accidentally trigger hidden tax traps that cost them up to $30,000 a year in unnecessary penalties, interest, and dual state residency assessments. If you do not proactively structure your domicile before booking your tickets, your former home state will gladly treat your hard-earned portfolio as a captive piggy bank. Today, we are analyzing retirement taxes if I travel full-time, state taxes by the numbers. To understand how this trap springs, you must understand the concept of legal domicile versus temporary residence. Your home state does not lose its right to tax your retirement income simply because you packed a suitcase and left. If you sell your house but maintain a local bank account, keep your driver's license, leave your medical professionals on file, or fail to establish a new legal domicile elsewhere, your old state still considers you a resident for tax purposes. They can and will audit your global retirement income to travel with, demanding a full percentage of your pension, 401k distributions, and capital gains. The mathematical difference between a poorly managed exit and a structured transition can easily exceed $30,000 annually. If you are departing a high-tax state like California, New York, or Illinois, your baseline portfolio withdrawal is immediately slashed by state income tax brackets reaching up to 13%. Over a decade of sustained travel, this structural leak systematically erodes your principal balance and heightens your sequence of returns risk. To completely neutralize this threat, you must execute a deliberate domicile shift to one of the income tax-free safe havens. South Dakota, Texas, Florida, and Nevada are the premier structural anchors for full-time travelers. But you cannot just rent a post office box and call it a day. States like California employ aggressive residency auditors who use specific data points, including where your primary bank accounts are held, where your vehicles are registered, and where you take your annual physicals to challenge your departure. To legally secure a 0% state income tax rate, you must utilize specialized nomadic mail forwarding services that provide a physical, state-recognized residential address. In states like South Dakota, the structural math is incredibly favorable. By spending just one single night in a local hotel or campground, obtaining a local receipt, and presenting it to the Department of Public Safety, you can legally secure a driver's license, register your voter status, and transition your legal domicile. This single 48-hour operational move instantly insulates your global retirement travel cost of living from state-level tax erosion. Once your state domicile is legally locked down, you can then optimize your federal tax landscape. If your retirement income to travel with relies heavily on traditional tax-deferred accounts, a lifestyle of global geographic arbitrage creates a unique window for aggressive Roth conversions. By traveling through low-cost international hubs, you can intentionally depress your annual lifestyle costs, allowing you to convert large portions of your traditional retirement portfolio into tax-free Roth accounts while remaining inside the lowest possible federal tax brackets. Operating a full-time travel lifestyle by the numbers requires treating your residency exactly like a highly optimized corporate structure. You must sever your ties to high-tax jurisdictions completely and systematically replace them with data-verified legal anchors. If you guess, you lose $30,000 a year. If you follow the math, you secure absolute financial freedom. To see the exact mathematical framework we use to structure international budgets and protect retirement portfolios from tax erosion, watch our comprehensive deep dive into the 3 real retirement budgets right now. Click the video on your screen to secure your strategy.